This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, September 30th, 2015. Euro dollar. So the euro continues to be locked within a consolidation over the past several sessions, and really if you look back over the past few months, the market's been trading in some sideways chop. At this point, the overall trend continues to favor the downside, and any rally should be very well capped. Look for a break back below 110.87 to open the door for an acceleration of declines towards the July low, which comes in at 108.09, and only back above the 114.67 high that we saw going back to mid-May would compromise or take the immediate pressure off the downside. Sterling dollar. So cable continues to trade lower over the past several sessions since topping out at 156.59 and ahead of that 2015 peak at 159.30, and there's risk for additional weakness now down towards initial support at 150.90, which guards against psychological barriers at 150 further down. At this point, any rally should be very well capped ahead of 153, while ultimately only back above 156.59 would compromise the current downtrend. Dollar yen. So dollar yen continues to be chopping around over the past several sessions, but the market is looking like it wants to potentially put in a lower top now after that significant decline that we saw back in August. Look for that lower top to be at 121.74 ahead of the next downside extension back towards that 116.12 low that we saw on the 24th of August. Only a close back above 121.74 would compromise this bearish outlook. Euro Swiss. So more sideways trade for Euro Swiss over the past several sessions, but overall the market retains its recovery outlook and continues to look to push higher to fresh multi-month highs towards a measured move objective at 112. At this point, any dip should be very well supported, while ultimately only back below 107.14 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is traded back down after recently stalling out at 72.80, where a lower top is sought out ahead of the next major downside extension to fresh multi-year lows. At this point, look for a break below the recent lows that we saw just over 69 to open the door for a move down towards the 68.30 area, below which exposes the 65 area further down. Really only back above 72.80 would take the immediate pressure off the downside, while a break above 74.40 would be required to force a shift in the structure. Dollar CAD. So dollar CAD retains its highly constructive outlook with the market pushing to yet another fresh multi-year high, 11-year high, and now focused on a test of psychological barriers at 135 further up. At this point, any setbacks should continue to be very well supported, while ultimately only a breakback below 128.60 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has been locked in a well-defined downtrend, and the market has just been chopping around in recent trade, but the price action is classified as a bearish consolidation ahead of what should be the next downside extension below that extreme low that we saw back in August 24th at 61.30 and into the potentially the 50s further down. At this point, only a break back above 67.40 would force a shift in the structure. SPX 500. So the S&P 500 continues to show signs of major topping and the formation of a structural shift here after the market broke down significantly back in August, trading all the way down into the 1830 area. We've since seen a bounce that's been well capped just above 2000 at 2022, and a lower top is now sought out there ahead of a bearish continuation below that 1830 area recent low. Gold. So gold looks like it's putting in a recovery structure now with the market recently well supported in the 1100 area. Look for a fresh higher low there ahead of the next major upside extension beyond 1170 and towards 1233 further up. Really only back below 1100 would compromise the constructive outlook.